Have you ever stopped and wondered, am I ever actually going to own a home? If you're renting in Ontario right now, that has probably crossed your mind more than once, maybe even today. And if you already own a home, you might feel like you're part of a shrinking club, like you made it in just before the door slammed shut behind you. Now, I don't say that to be dramatic. I say that because right now across Ontario, across Canada, that's exactly what the numbers are telling us. We're in the middle of a shift, a real uncomfortable one. And the shift is this: more Canadians are renting, fewer are buying, and the dream of home ownership, what used to be considered the rite of passage, is starting to feel like a luxury reserved for the lucky few. Let's paint the picture. 10, 15 years ago, you had a steady job, a little bit of savings, and a half decent credit score. You could probably buy a starter home somewhere in Ontario. Now, it might not be your forever home, but it was a foothold. It was a way to build equity and a way to building wealth and security. But today, we're seeing more people with good incomes, good credit, good full-time jobs getting shut out of the market. And why? Because the cost of housing has risen so far and so fast that even the middle-class families are starting to fall behind. The gap between income and home prices isn't just wide, it's historic. In Ontario, the average price of a home has more than doubled in the last decade. Let me give you an example. Back in 2014, you could buy a detached home in Niagara region for around $275,000. Today, that same home is closer to $650,000 to $700,000, even after the recent market correction. And yet, our salaries, they didn't double. Wages might have gone up 10 to 15% in the same time if you're lucky. So let me ask again, how is the average person supposed to keep up with that? Now, here's another layer to this. It's not just about the cost of buying, it's about the cost of waiting. Because while home prices were going up, so was rent. In fact, rents in Ontario have surged to a point where it's unusual. In fact, rents in Ontario have surged to a point where it's not unusual to see $2,000, $2,500, or $3,000 a month for a modest place in many cities. Toronto, Hamilton, St. Catharines, Kitchener-Barrie, pick your city. Rents are high, supply is low, and bidding wars aren't just happening on homes, they're happening on apartments. And here's the cruel irony. The more you pay in rent, the harder it is to save for a down payment. The harder it is to save, the longer you rent. And the longer you rent, the more prices and interest rates creep up in the background. It's a vicious cycle that many Ontario people feel trapped in. Even people that are doing all the right things, saving, budgeting, working, still stuck. So what happens? Well, people start to give up on the dream of owning, not because they want to, but because they feel the dream has given up on them. And I don't blame them, because it's not just about the money at this point. It's about confidence, fairness, and the sinking feeling that maybe that's not just in the cards anymore. But here's where it gets more frustrating. We've been conditioned to believe that renting is just a phase, that you rent in your 20s, buy in your 30s, build equity and security in your 40s, and retire in your paid off home by the time that you're 60. That is in fact the traditional path. That's the story that we've been told. But what happens when that story no longer matches reality? What happens when people hit the mid-30s and they're still renting? Not because they've made bad choices, but because they've lived in a system that has quietly reshuffled the rules without telling them. And that's what brings us to the heart of this video. Because while it might feel like home ownership is dying, what's actually happening is this. Home ownership is becoming more expensive. It's becoming more complicated, and it's being shaped by forces that most people never see coming. Interest rates, inflation, supply chain, investor demand, government policy or lack of it. All these things are working together, intentionally or not, to make it harder for the regular people to buy a home. And unless you know how to navigate this new landscape, you're left behind. Now, I know what you might be thinking. Great, Justin, thanks for the depressing news. But this isn't a doomsday video. In fact, quite the opposite. I believe that when you understand what's actually happening in the market, you can start making moves. Moves that protect your future and your family's future. Because while the traditional path of home ownership might be broken, there's still paths forward. They just look different now. And in the rest of this video, I'm going to walk you through what's driving this shift away from ownership, why renters are paying the hidden prices, and what you can do right now. if you want to flip the script and become a homeowner, even in this market. So if you're tired of feeling stuck, if you're tired of your rent increasing every year and getting nothing in return, stick around because this video is for you. And let's break it down. All right, so now that we've set the stage, let's dig into the real reason why home ownership in Canada, and especially in Ontario, is slipping out of reach. Because this didn't just happen. There is a specific, measurable, and frankly frustrating forces at work that are shaping the markets today. And unless you understand them, it's easy to feel powerless. So here's the question we're going to be tackling right now. Why is it getting so hard to buy a home? And who's really paying the price? Let's break it down. Section 1, the numbers don't lie. First things first, let's look at the data. Since 2011, Canada's home ownership rate has dropped by about 69% to just under 66.5%. That might not sound dramatic at first, but in a country with over 15 million households, that means that hundreds of thousands of families who would have bought a home a decade ago can't today. And in Ontario, we're seeing the fastest decline in home ownership amongst millennials and Gen Zs. Young people, many with solid jobs and good education, are being priced out faster than any other generation before them. Meanwhile, rents have skyrocketed. Take this in. In 2023, the average one-bedroom apartment in Toronto was around $1,200 a month. Today, you're looking at $2,600 a month if you can even find something. And it's not just Toronto. Hamilton, Barrie, Kitchener, St. Catharines, Ottawa are all seeing the same trends. Rents are up, inventory is low, and competition is fierce. And when rents are high, saving for a down payment becomes nearly impossible. You're not just fighting the housing market, you're fighting time. And the longer that you rent, the further you fall behind. Now here's the part that really stings. It's not just bad luck, it's the system itself is outdated. It was designed for a different time, a time when a single income could afford a home. Interest rates were low, and house cost 3 or 4 times your salary, not 10 or 12 times. But we're still using the same rules to approve mortgages. Let's say you're making $80,000 a year. Now that's good income, but the average home price in Ontario is over $850,000. Even with 20% down payment, and let's be honest, most people don't have that, you still wouldn't qualify under the bank's rules. So why don't you qualify? Because it's something called the stress test. The stress test says even if you have a mortgage rate of 5.5%, you have to qualify at a rate of 7.5%. That's a huge barrier. It was meant to protect people from rising interest rates, which makes sense in theory. But in practice, it's keeping qualified buyers out of the market. Here's the next piece of the puzzle: investors. Now, I'm not anti-investors. Real estate is a business for many, but here's what's happening. More and more homes, especially starter homes, are being snapped up by people who already own multiple properties. In fact, according to the Bank of Canada, over 30% of homes purchased in Ontario in recent years were bought by investors. That's 1 in 3. So when a duplex, a semi, or a townhome hits the market, first-time homebuyers aren't just competing with each other, they're competing with investors offering cash, no conditions, and fast closing. It's hard to win that fight. And those homes, they don't become someone's primary residence. They become a rental, which means that they don't help build home ownership. They build passive income for somebody else. And again, renters are left paying the price. But here's the reality. Even if we green-lighted every single housing project tomorrow, we're still years away from seeing meaningful change in supply. Permits, labor shortage, materials, local zoning, it's all slowing things down. And until that supply actually hits the market, we're still stuck in the same demand-heavy, low inventory cycle. That drives up prices, drives up rent, and again, it's the renters that take the hit. Let's add on one more layer to this already heavy situation. Credit conditions have tightened, banks are being more cautious, inflation has eroded your purchasing power, and debts are rising. That $1,200 a month car lease, that $15,000 credit card balance from helping with daycare and groceries, it's all works against you when you go to get approved. The bank doesn't see your hustle, they see your credit score and the debt service ratio. So even if you could afford a mortgage on paper, you're often told no because you don't fit the mold. That's not your fault. That's the system and it's outdated. Now let's talk about the stuff that you can't put on a spreadsheet, the emotional toll. Renters aren't just facing financial pressure, they're facing instability. Can't plan long-term, can't customize or invest in their space, often forced to move with little notice, and always wondering if next year's rent hike will break them. Meanwhile, friends and family members who did get in a few years ago, they're watching home prices grow, their monthly payments stay stable, their equity increase with every payment. That's not a wealth gap, that's a security gap, a dignity gap. And it's not okay. So where does this leave us? We've got a pricing problem, a policy problem, a supply problem, and a lending problem, and an emotional crisis for millions of renters who feel stuck in limbo. That's the confrontation and that's the harsh reality. And that's where most videos stop, but not this one, because we're going to flip the script. We're going to talk about what renters can do right now. We're going to cover 5 real solutions, strategies that people across Ontario are already using to move from renting to owning. Because I don't believe home ownership is dead. I believe it's changed, and if we can learn the new rules, if we can see a path that still exists, no matter how different it looks, we can still win. So everybody, let's take a deep breath and let's dive into the solutions. Okay, so we've broken down the problem. We've looked at the rising costs of housing. We've unpacked the outdated lending rules, investor demand, and limited supplies are boxing people out. And we've talked about the emotional and financial toll that renters are facing. Now, the big question becomes, what can I actually do about it? Because despite how things feel right now, I want to be crystal clear about something. Home ownership is still possible. It's still worth pursuing, and there are options, good ones, if you're willing to think a little differently and take the right steps. So let's dive into the 5 strategies that are helping Ontario renters make the leap into home ownership, even in today's market. Strategy number 1, know your numbers, even if you're not ready to buy yet. Let's start with something simple but powerful. Get pre-approved. I know what you might be thinking, but I'm not ready to buy, or what if I don't qualify? That's exactly why you should start now. Getting pre-approved, even an exploratory one, tells you what you can afford today, what's holding you back, if anything, and what your monthly payments would actually look like if you did buy. And more importantly, it gives you a plan, because once you see the numbers in black and white, you can start making moves. Most people are walking around blind, thinking they need $100,000 saved and perfect credit to buy. And that's simply not true. There are programs, there are options, and there are workarounds, but you'll never know unless you sit down with someone and run the numbers. Strategy number 2, supersize your down payment even with a modest income. One of the biggest myths about home buying is that you need 20% down. Let's bust that right now. For first-time buyers in Ontario, you need 5% down on a home up to $500,000. For homes between $500,000 to $1.5 million, that's 5% of the first $500,000 and 10% of the rest. So if you're looking at a $600,000 home, your minimum down payment would be $35,000. Now that's still a lot, but it's not out of reach. And here's how you can get there faster. Use a first home savings account, or FHSA. It's tax deductible going in and tax-free coming out. Tap into your RRSPs through the home buyer's plan. Up to $35,000 a person, you can withdraw from your RRSP to use as the down payment. Set up automatic savings. Even $50 a week adds up to $2,600 a year, more with compounded growth. Leverage workplace bonuses, tax refunds, and a side hustle income. Funnel it directly into your down payment fund. I've seen people build 5% down payment in under 18 months using these exact tips. It's about discipline, not perfection. Strategy number 3, think creatively because rules have changed. Here's the truth most banks don't want to tell you. If your current income or credit doesn't qualify you with a major bank, that doesn't mean the journey is over. It means you need to think differently. Let me give you some ideas that I've seen work. Add a cosigner. Maybe it's a parent, a sibling, or a partner. It's a lot more common than you think. Buy with a friend or a family member. And yes, it requires trust and a good lawyer, but it can work beautifully. Look at multi-unit properties. A duplex or a home with a basement suite means rental income, which boosts your qualification. Explore gifted down payments. Many payments would rather help you now than leave it to you later, and it can make a huge difference. Consider a rent-to-own program. In the right situation, this can lock in a purchase price while you build credit and savings. The point is, there is more paths to home ownership than most people realize, but you have to be willing to go beyond traditional approaches. Strategy number 4, expand your map and find hidden gems. If you're looking in Toronto, Burlington, Oakville, or Mississauga, I won't sugarcoat it, it's tough. But step outside the big city bubble. There's opportunity. Let me rattle off a few spots where first-time homebuyers are still getting in. Welland, St. Thomas, Belleville, Orillia, Quinte West, North Bay, Sudbury. Are these your dream cities? Well, maybe not. But are they affordable? Absolutely. And many of them are seeing infrastructure upgrades, economic growth, and rising values, which means it's a great place to build equity. With remote work, hybrid options, and better transit, living in a smaller city no longer means giving up your lifestyle. It might just mean gaining a home and a future. Strategy number 5, work with a mortgage broker who actually gets it. Look, this part matters more than you think. Most people go into their bank first and they get told no and then they stop. But your bank isn't your only option. There are dozens of lenders in Canada that specialize in self-employed buyers, new to Canada buyers, buyers with bruised credit, buyers with high debt ratios, and buyers who don't fit the bank's mold. They're called alternative lenders or B lenders. Yes, the interest rates are a little bit higher, but they're a bridge and not a forever solution. I've helped hundreds of clients get into homes through B lenders, rebuild their financial profile, and refinance back to a traditional lender within 12 to 24 months. A mortgage broker helps you find the best path, sometimes not the easiest one, and the best ones will walk it with you every step of the way. So let me end with this. If you're renting today, it's easy to feel discouraged. It's easy to look at prices, rates, headlines, and think, why even try? But here's what I want you to remember. This system wasn't built for you, but you can still win inside it. You don't need to have it all figured out, you just need to start. The longer you wait to explore your options, the more expensive it becomes to stay on the sidelines. So take the first step. Book a call, run the numbers, build a plan that's designed around you, not someone's expectations. Because even if homeownership looks different today, even if it's harder than it used to be, it's still one of the most powerful ways to build wealth, stability, and freedom in this country. And I want that for you. If you're ready to explore your options, even 6 to 12 months away, click the first link in the description and book time with me. Let's see what's possible, because home ownership isn't dead. It's just waiting for you to make the first move.